Well, hello and welcome. Thank you so much for joining me here for this weekly update. So, what have we seen in the markets? Well, we've been moving down since the last CPI numbers came out. Weren't as good as expected, and that is putting some pressure on the overall market. No doubt about that. So, we have a new opening range, right? 3880 on the SPX. If it closes above there, we're in bullish opening range mode. Below 3837, we're below there, we're in bearish opening range mode. But very importantly, this week, we actually closed below this trend line that I showed you guys last week. So this trend line, now that it's broken below that, the path of least resistance is still to the downside. So still a lot of bearishness going on here. We could then break out and go back up to this trend line, and that's now going to act as resistance. It was support, now resistance, and then turn over at that point. We will watch that carefully, but really all eyes will be on the Federal Reserve this week on Wednesday. The FOMC statement and the press conferences coming out, people will be dissecting that very closely, seeing what the Federal Reserve is saying about inflation. How much are they going to increase the interest rates? Is it by 0.5 or 0.75%? My best educated guess would be 0.75%. Okay, that's what I probably think will happen. But it's not, I don't think 1% is on the cards. I really don't think that's the case. But 0.75% would be my best educated guess after the CPI numbers last week. So what I would say is it's not just about how much they're going to increase interest rates, it's about their forecast going forward. It's always, the market's always forward looking. So they're certainly going to be forward looking this time. How are they viewing inflation? Do they have it under control? What are they looking to do going forward? That's what people are going to be dissecting very, very closely. So we're going to be keeping a close eye on that. And that's something that you certainly want to watch. Now, as far as the overall market goes, when we look at the 21 EMA, which for me is the line in the sand between bullish and bearish short term on a daily chart, we can see that all the major indexes are below the 21 EMA. So that's certainly showing some bearish signs. Now, when we look at all the major sectors, right, we've got the index, and then you narrow down into the sectors, we can see that all the major indexes are below their 21 EMAs as well. So my best educated guess here is that we would now, if I go back to this chart here, we would now potentially move higher here from an oversold condition, move higher up to this trend line here, and then continue to move back down. That's probably what I think will happen. But obviously, a lot of it will be determined by what happens with the Federal Reserve. The Federal Reserve is controlling this market 100%, right? So you've got to wait until Wednesday to understand what's going to go on. I think that's very important to be patient. Now, remember last week I spoke to you guys about Apple, and I said, look, you could get into a trade with Apple, and I'm seeing a huge amount of open interest on the calls and the put side at 150. I'm looking for the stock to pin, it's called pinning at 150. Look at this, 150 and 70 cents. We made an incredible return on this, 234% return in 5 days. Pretty amazing. Remember I said I'm looking for it to stay between 160 and 140 and pin at 150 with a beautiful butterfly put debit spread. Absolutely crushed it. 234% in 5 days. Pretty amazing with a fixed limited risk. Love it, love it, love it, right? So my members loved that one. Another one that you could get into this week is Google. Let me just type that in correctly. Google is another one that has a lot of open interest, both on the calls and the put side, at the 110 strike. So we've certainly seen a big move down. We've come down to this significant support level here. You can see the whole range of pivots here, pivot here again, and it did come down to 100 intraday, bounced off there, and I think what we're going to see is a bounce here moving up to around 110. Large amount of open interest at the calls and the puts at the 110 strike, and I'm looking for it to stay between 115 and 105. I've got that out to the 21st of October, and I'm looking for it to stay there just for a small amount of time for me to generate my return. So that's what I'm looking for there with Google, like I did last week with Apple and absolutely crushed it. And these are the types of strategies that you can utilize in your trading. Non-directional. Most of the time stocks don't move a lot. And if you can start to utilize non-directional trading with directional trading, now you're in another league as far as generating income in the markets, because you don't necessarily need strong direction in either up or down, right? And it's a very good place to be, right? Adding tools to your arsenal as a trader is very powerful. Non-directional and directional trading is where it's at, and this is what we do with cash flow option strategies. So that's what we're looking for there. Now, for me personally, there may be some more opportunities with Google moving forward. I think it's a very undervalued stock. I'll talk more about that next week, but for now, that's a very small trade. Now, that trade that I'm looking to take here is a 4-to-1 risk to reward, 4 times the potential profit as the risk that I'm taking. So the risk is, for example, $1, and the potential profit is $4, 4 times as much, right? It's not quite like that, but it is 4-to-1. So that's what I'm looking for there. Asymmetrical trades. If you continue to take asymmetrical trades with a fixed limited risk to the downside, right, as far as your potential risk to your account, you can do extremely well with your trading. And that's exactly what this is. One contract between 115 and 105 is $84 of risk. $84, right? So it's a pretty impressive sort of risk to reward there, and that's the only reason I'm taking it ahead of the Federal Reserve meeting on Wednesday. So let's wait, let's see what the Federal Reserve says, and we'll look to get into some new trades next week. Now, just as to give you guys an idea, with Apple, when I was looking for it to pin at 150, which is exactly what it did, a $292 outlay with a risk of 150 because of our stop, we turned a $292 investment into 975 in 5 days. Hence the 234% return in 5 days, right? So pretty incredible to be able to do that. Options are the most powerful, flexible investment vehicle on the planet. Provided you know how they work, it can be life-changing. So we'll look to do that with Google this week, and then we'll look to get into some new trades once the Federal Reserve gives us a little bit more direction. All right, my friends, talk to you again next week. All the best. Bye for now.